Let's talk about the ghost candle pattern, something that everyone's talking about. Have you ever seen a candle that acts like a ghost and then it just disappears and then it kind of makes money? Well, we're going to talk about that today. I'm going to take you and show you that. And in the 34 years that I've been trading, well, I never came across anything like this. It's really interesting. I'm going to show it to you today. For those of you who don't know me, I'm Rob. For those of you who do know me, I'm still Rob. It's Coffee with Rob. Don't forget, trading's risky. Most traders lose money. If you don't like losing money, then don't trade. Let's go and have a look at the charts. Let's go and check this out. And let's see if this is something that you would be interested in trading with on any given day.
Ever seen a candle that appears, then vanishes almost like a ghost? Well, that ghost candle might just be one of the fastest ways to catch micro moves in the market if you know what to look for. It started with a trader named Alex. He was scalping the 1-minute chart, frustrated after missing move after move. Then one morning, he noticed something strange, a sudden candle that spiked up and instantly pulled back, leaving barely a wick behind. No news, no volume surge, just a quick flash and gone. At first, Alex ignored it, but then it happened again and again. Each time, the price retested that ghost level, and every time it rejected hard. He started marking them, those ghost candles. They revealed hidden liquidity zones where big players were testing price before making their move. Alex realized the secret. The ghost candle wasn't random, it was a trap. When it appeared, it showed where stop hunts happened, and when price came back to that level. It offered a perfect scalp setup. He turned what most traders ignored into his 1-minute profit weapon. The next time you see a candle that flickers and fades fast, don't scroll past it. Mark it. Wait for the retest. That ghost candle might just reveal where the money really moves in the market. So now you know the ghost candle pattern. Simple, sneaky, and powerful. If you want to see how we trade it, continue watching and I'll show you. Leave a message in the comments if you want to know more about this system.
Ooh, it's the ghosty candle, the ghosty candle. How are we going to work with a ghosty candle? Look, what is a ghosty candle? What is a ghost candle? Well, what a lot of guys do is they work this on a time-based factor. So what they do is they use this on that opening 15-minute strategy where they try and figure out and they use the candle for that. But you can use this on a regular basis. It's just drawing a line in the sand like anything else. And what it's all about, it's actually not really a ghost. It doesn't go, ooh, it's not Casper or anything like that. It's effectively a candle that looks like this big green one here. I'm going to use this as an example, and I'm going to use a short example as well. See that candle there? It's an engulfing candle. What does it mean if it's an engulfing candle? It's engulfed the previous price action, okay? It's cleaned it up, right? Even that candle's cleaned up. And then at the bottom, you've got a flat bottom on the green candle. So it's a flat bottom. Okay, there's a tiny tail there, not a big deal. But on that flat bottom, what I'm going to do, I'm going to take this price and move it up to the bottom. That's the red line. And I'm just going to say that's the support. That's the bottom of the line on that candle. How does this work? Effectively, what we do is we take a rectangle again. You see the wick on top of the candle here? You take that wick and you draw the liquidity into there. Okay, that's the area you want. Right there, that candle wick. Okay, you've covered that candle wick. And then the trick is this. What you can do is you can take a green line. I'm just going to use a green line. You can use any color you want. I'm just using this example. You see above the candle, the flathead, not the wick, the flathead. I'm going to draw a green one in there. Okay, it's yellow. Let's make it green. Okay, so we can see what's going on. So that's your bottom. That's your top. This bit in the middle, here is a no-go zone. No-go zone. You don't want to be in this bit here. This bit is completely useless. You don't want to be there. So that's between the red line and the green line. That's useless to you. So don't go in to the no-go zone. And the trick is, if this price, so after that candle, you get price movement, price movement, price movement. If it breaks through that level, you buy, but only if it's come back into this level and then broken through this level. So what happens here is it comes back into this level, no-go zone. If it drops below this red line, there's no trade. no trade whatsoever. So below this red line, no trade. So down here, no trade. Okay, so we're not trading there at all. If it goes up and it breaks through that level there and it shoots to the upside, first green candle, you've got a trade, buy long, and then off she goes. This works on any time frame, by the way. So there's your buy, and then off she goes, and you've got the buy. This obviously works on a short trade as well. I'm going to show you that, how it works on the short trade as well. Let's leave these lines here so we can use them. I'm just going to use them in a moment. And let's go over here, and here's a short example of this. I'm still going to draw the red line in on the lower side because we're going to use it as a short trade. And I'm still going to draw the green line in as the resistance because I always see it that way. There's your no-go zone in the middle. There's your big engulfing candle to the short side. You draw your rectangular one in here on that tail. There's your tail filled nicely. And on this level, comes down, it goes back, comes back, goes through that level, and bounces off down to the downside. There's your short trade. Get into your short trade, and off you go. And that's now your short trade. That's how this ghost candle system works. It works on an engulfing candle. Does it work? Does it actually work? Look, to be fair, I can't promise you that it works because I don't use indicators. I don't use this system. This is just something, and I've been doing this for 34 years, and I always find these things in these shiny tools. Now, somebody's come up with this ingenious idea. A lot of people are using it for that opening 15-minute trade. And I don't think that works in the slightest. I don't think it works at oil at all. I just saw oil. I mean, did I buy oil and I go into a loss? How did that happen? Wow. Okay. I made a mess of that one. Okay, here we go. I didn't see that earlier. Just to give you an idea, for example, here is one with a giant. It does seem to work on a regular occasion, but I haven't done enough testing to actually decide whether this is going to be a worthwhile system for anyone or not. But have a look at it and do your back testing or forward testing, do some demo, have a look at it and see for yourself what you think of it. I'm not going to go into too much detail on this because I'm not going to be using it. It's not my thing. But here we go. I'm just going to draw in the bottom line here. Okay, let's draw the top line in because that's green. And then I'll draw the bottom one in and make it red. Okay, so there you go. There's your engulfing candle. It's engulfed all the candles before it. So there's your engulfing candle, and there's your no-go area there. Now, you're going to draw in your little tail end, which is that. That's the area you would have been looking for. And then the price comes back down, which is what you want. It goes back up, and it breaks through this level. Once it breaks through this level, you can buy, and it goes long, and it gives you the long trade. How do you work out your targets? I don't know. You have to follow up with your stop loss. That's the only way. You could incorporate this into your support and resistance system. The only reason I'm showing you this is because we use price action on a regular basis. So you know we use resistance, we use support, we use trend lines. But I thought it might be of interest to you to try this if you spot this in your trading. So for example, you're busy trading, you see the head and shoulders, you're busy trading, you see the trend, you see the way the trend's going, you see the movement, and you spot the engulfing candle because candles are helpful. You can see when the buyers are getting in, the selling, all that sort of thing. But if you spot the engulfing candle and you spot this sort of scenario, you could perhaps use it as a bit of confluence to your trade and say, well, it might be a good idea to look at that. It might be a worthwhile trade. And that's the only reason I'm actually looking at this. I'm not looking at it because I'm into ghosts and gooey things and, scary stuff and whatnot, ghosts, ghost candles that come and go. No, they just call it a ghost candle for whatever reason. It comes and then it disappears. Then it wins you your trade. Now, just remember, though, if you do want to take this like this trade, you've got to wait for it to come back. If it just goes straight out like that, that's not a trade. If it drops below this level, that's not a trade. This is a no-go zone. But just keep your eyes open for that. But then if it goes back and breaks through, then it's a good trade. I would wait for the green candle. I wouldn't go on the red candle like that. I'd wait for some movement where you get the green candle out and then buy. And one thing I have noticed about these ghost candle trades is that movement is not very vast. You see how vast the downward movement is afterwards, and the upward movement doesn't go very, very far. So be careful of that. There's obviously a long way to go back on most of these trades. I've noticed that on these ghost candles, you get the movement up, but it doesn't go super far. So that's why I say when you ask me what kind of target should we be targeting after these trades, like I say, I'm not 100% sure on that. I think we need to test that out, maybe follow it up with stop losses, get a few trades that work with the system and see how it goes. But don't change the system, guys. Don't stop trading with price action. Don't start adding loads of indicators into your trade. I do like to look at candles there and spot things like this, and they are quite useful. But just disclaimer, guys, this is not something I've used. This is not something I use. This is not something that I've used in my 34 years of trading. This is just something that I've picked up on, and it does look interesting. It does look interesting. I've looked at a few of it. I've done a bit of research myself, not a lot, but I've just noticed that it does seem to do that as well. What they say it does seem to do. How many times it does it? Will this make you money in the markets? I really don't think so. Probably not, but it is useful, perhaps. Let's go and talk about the strategy, and let's see from there if we can make you some dosh in the markets. So now you've seen the ghost candle pattern. Now you've seen how, ghosty candles work. And will that work? Will it actually make you money in the market? Probably not. You see, charts don't make you money. You can't predict the future. Charts can't predict the future. In fact, no one can really predict the future. Unless, of course, you've got some kind of time travel thing going. I don't know. Perhaps you have. Some people might have. I know I don't. I don't have that magic pill in my pocket. Is the ghost candle a magic pill? Is it the thing that's going to make you money in the market? Probably not. There's probably not much chance of that either. Do you know why that is? That's because every single system in the market works. It's just a question of how you use it and how you understand it. You see, the market's about understanding. It's not about finding the magic pill. Charts are not going to make you money. Many years ago, old man came to me and said, Rob, you can only make money by having time in the market. No, a lot of you don't like those kind of aneurysms and those kind of things. And people say that, you're like, that's a load of old rubbish. How can I listen to that old man? But do yourself a favor. It took me 10 years to listen to it. Perhaps you'll be able to listen to it a little bit quicker. Time in the market is really the only way to make real money in the market, investing in the market. But if you want to be a trader, and that's what I've been for many years besides an investor because I enjoy trading, then you have to think for yourself, if I can't time the market, if it's not possible to time the market, if charts can't predict the future, if I can't predict the future, and time in the market's the only way to make money according to the experts, then how can I make money trading? Because there are a lot of traders out there making money with trading. And then the aha moment comes to you, and you realize it's about profit. It's about a business plan, and it's about strategy. You see, the market's not about how many times you can win in the market. The market's about how many times you can win when you're right. In other words, the more profit you can make when you're right, then you lose when you're lost. In other words, when you lose, get out quickly, take small losses, and when you're winning, make big wins. It's a bit like tossing a coin. If I toss a coin 10 times and I say to you, well, for heads, I'm going to give you 2, and for tails, I'm going to give you 1, you all believe that the heads and tails will land 5 times on tails, 5 times on heads. But if I'm giving you 2 for heads, there isn't a person in the world that's insane enough to choose tails. Everyone will choose heads because the odds are in your favor. And that's how it works at the end of the day. So what you've got to do is you've got to try and make more on your wins and lose less on your losses. The trick comes in with how do you do that? How do you actually apply this strategy? How do you actually apply this business plan so that it can work? Because you're going to say to me, well, Rob, every trade is different, and I've got to put a different stop loss in every trade, and I've got to do this on every trade, and I've got to do that on every trade. And all the excuses under the sun will come out. This only applies to leverage trading, by the way. If you're trading spot trading or if you're investing, that's a completely different ballgame. Because with that, you really don't need a stop loss. and you really don't have anything to lose except the whole trade. But anyway, with leverage trading, that's much more complicated. There's a lot to lose in leverage trading because you're taking $10,000 and buying $100,000 worth of stock with it. And if it loses 10%, you're going to lose your entire investment. And this is where it becomes tricky with leverage trading. And this is why trading is 50-50. When you choose a trade on a chart, there's a good likelihood that it can go for you, and there's a good likelihood that it can go against you. And do you know why that is? Because you're trading with other human beings. It's all about human beings. It's not about lines. It's not about candles. It's not about little squiggly lines. It's not about ghosts. It's not about anything like that. In fact, every single time you take a trade, you're buying stock from another trader. Every time you sell a trade, you're selling stock to another trader or investor. It's not about squiggly lines. You're not dealing with robots. You're not dealing with little charts in front of you. You're dealing with people. You just can't see them because you're sitting alone in your study, office, home, dining room. I don't know where you are, but you're trading on your own and you can't see those people. And that's what blinds you. That's what blinds you at the end of the day. The other thing you're thinking is, I'm going to make $150,000 because I saw that trader on YouTube. He showed me he made $150,000 just like that. Look at that. I want to do that too. But I've only got $1,000 in my pocket and there's no magic pull. So how am I going to do that? This is where it all goes wrong because you think you're going to do that because he did that, but you can't do that. It's a completely different game. So when you're trading, what you have to understand is this. You need a business plan. You need a strategy. You wouldn't start a normal business without a business plan. I don't know anyone who wouldn't do that. I mean, you want to know where it's going to be, how much capital you're going to need, what am I going to sell? Am I going to be selling stuff? And am I going to be making stuff? Is it a factory? Am I going to need machines? Am I going to need conveyor belts? What am I going to need to make this business work for me? Those questions you're going to ask yourself. It's not like a 1,000-page business plan. It's just simply, how am I going to make this work? It's as simple as it gets. Now, with trading, for some other strange reason, traders don't do that. Traders tend to just go, well, I'm just going to start trading. I get a mouse and a computer and a PC and a whole bunch of screens on the wall, and I'm just going to start clicking buttons, and hopefully I'm going to make some money along the way. The trouble is, you get into trading, you don't think about the business plan, you don't think about the profit, you don't think about anything. All you think about is that course who told you if you take all these charts and you trade with these charts, you're going to win 7 times out of 10. So you're going to have a win rate, which doesn't make you money, by the way. And then you're going to be great in trading. And then you start trading and you start making a loss and you start wondering why. But I win 7 trades out of 10. How can I be in a loss? Well, it's really simple. At the end of the day, you're losing more than you're winning. And this is what people don't get. It's so straightforward. It's unbelievable. What you have to do is have a simple strategy. Now, I don't say that you have to trade with 1% risk. I'm just using that as an example of what I do. And I'll explain why. And I trade on the 4-hour charts because it's much easier to position trades and whatnot. But if you want to sit and you want to watch charts all day long, you're welcome to trade on those 5-minute, 15-minute charts. That's up to you. Just know that the lower down you go with the time frames, the more possibility you have of losing. In fact, day traders who trade on 5-minute charts, 99% of traders lose money. And I know you think you're going to be part of the 1%, so we're not going to go there. The strategy will remain the same, no matter what time frame you're trading on. One of the most important things on those charts, by the way, which I haven't discussed with you guys, is try and figure out on the higher time frames whether the trade is bullish or bearish. And then when you go to the lower time frames, try and follow that trend. It'll help you. Believe me, little tip. There we go. Nothing to do with what I'm telling you now. What you have to learn to do, though, is you have to learn to separate the charts from your business plan, the charts from your strategy. Because charting is one thing, strategy is something completely different. Strategy is where the money's made. Strategy is the little cheat code. Strategy is the little area that people don't tell you about. What the institutional money does, what pro investors use, is this. And it's simple and it's straightforward. You risk the same amount every single trade you take on any particular account. If you have a particular account and it has an account size, whether it grows or whether it gets smaller, don't change your structure on the account size that you have chosen because you've chosen that account size structure. So if it's $25,000, keep it at that. That's your round figure that you are working with. I risk 1% on every single trade. Why? Because if I risk 1% on every single trade, I lose 10 trades, I lose 10% of the account, no big deal. If I risk 10% on every single trade, I lose 10 trades, I lose 100% of the account. Not great. What are the possibilities of you losing 10 trades in a row? Well, you shouldn't, but there are possibilities that you'll lose 7 trades in a row, and that will start to become quite daunting, quite difficult to control. So keep the risk low. You can choose 2%, 5%, 0.5%, depends on your balance and happy balance. But at the end of the day, it really doesn't matter, because what you're doing is you're making more on your wins, losing less on your losses. So you should balance out at the end of the day. So you should be okay. But I'll just use 1% as an example because I use 1%. So on every single trade, you're going to risk $250. But how do you do that? How do you keep it exactly $250? Well, it doesn't have to be exact. It can be 230, it can be 260, 270, but keep it in that region. Keep it as close as possible. The reason I say that is because now you understand how much loss you're taking on every trade, and you can keep the loss the same. The difficulty is applying it. Now, what you want to do is look at your trade first before you do anything else. Say, I would like to trade this, but if I trade this, where's my stop loss going to be? Is your first question. And you're going to look at it and say, I'm going to put my stop loss there. That's an invalidation area. It's an area where you know if the price gets there, you wouldn't take that trade. Now you know that if the price gets to that, it would be invalid. Now you work out the size of your trade. If you're a small trader and your broker's not giving you broken up trades or mini trades, you're with the wrong broker. Because if you can't get broken up or mini trades, then you should be a millionaire trader with big money, okay? But if you're just a normal trader with $1,000, $10,000, $100,000, $25,000, or even $500,000, you should be able to get mini lots or broken trades. So you can work out the size of your trade from that stop to the cost. You know how big your trade's going to be. All you got to do now is work out on the profit side, will I be able to make more than what I'm risking? Will I be able to make more than $250? Now, I don't say to you it has to be exactly 2 to 1, 3 to 1. It'd be nice, wouldn't it? But don't lose profit less than what you're planning to lose. Don't target $50 for a $250 loss, because that's the trick that takes every trader out. You're scalping and risking huge amounts for making small amounts. You want to be making $250 or more on every single trade. And then on the losses, if it goes into a loss and you can see the trade's invalid at $100 loss, just get out. Let it go for the smallest amount possible. But if it goes into profit and it's $100 in profit, leave it alone. Don't try and get out. If you're really worried about it, move your stop loss up into profit. If it takes it out, you get a small win. It falls into the category of those small wins. Most of my profit on trading is made from a few trades a year, not a lot. And then the rest is made from trades that made target. A few that made huge sums were above target, gargantuan sums. And then there's all those that made target. And then there's a large amount that made losses and small profits. The small profits coming from those stop losses moved up into profit, getting taken out rather quickly. On that note, don't forget to join the members area and get Trade of the Day every day and a few other interesting things that are available there to you. And while you're here, if you've watched the video this long and you haven't subscribed, why haven't you subscribed? Maybe you find me interesting, maybe you find me boring, I don't know. But either way, you watched the video till here, so surely you should be subscribed, man. So get in there and give us a sub and stay with us and join us for the live shows every Tuesday and Thursday, where we go over a subject every single week and we talk about these things that we like to discuss on a regular basis. But on that note, thanks for watching, and don't forget to watch my last videos, which go over the strategy in detail over and over and over again. I get lots of questions on the difference between the charting and the strategy, and people don't seem to quite grasp the strategy yet or the 50-50 principles just yet. And if you're not sure, join me on the live shows and ask me properly. You're welcome to ask me proper questions. You're not welcome to make cynical comments. You're welcome to ask me questions in the comments or comment nice things, but bad things will be removed. Thank you for watching, and I'll see you next time. Don't forget to sub. Cheers. Ciao and peace out.